Hi, this is Dave. Welcome to the weekly market recap, closing out the week for Friday, March the 7th, 2014. And I'm recording this video on Sunday, March the 9th, 2014. Happy March break for all those parents out there who are going to have their kids next week. I hope you have a good time with your family. I'll be working, but I'll be taking, some time off here and there if possible. And a lot going on right now. So let's just jump into the video. I wanted to keep this as short and to the point as possible. First thing I want to do is just I wanted to announce that we have an upcoming CSTA Oakville chapter meeting on, let me just see here. We have an Oakville chapter meeting on Wednesday the 12th. So if you come over to the CSTA's main page here, csta.org, and you scroll down on the news feed in the upcoming events section to, let's see, determining the right strategy for you, Oakville chapter meeting, you can click on this link here. This will take you to the registration page. Now, we'll be broadcasting this in person and via webinar if it doesn't make sense for you to drive to the event. This should be a really good event. It's going to be on developing or selecting your own existing trading ideas and evaluating whether that idea has a statistical edge. So you can watch it online if you can't make it Wednesday at 7 o'clock, or you can attend in person. There's always a great networking opportunity there. We usually average around 30 people at the meetings minimum, 25 to 30 people minimum at the meeting. So it's a great networking opportunity. You can just click here and register. Okay, so that should be a good event. Hope to see everyone there that can make it. It is a paid event, so I think it costs about $20 for those that are not CSTA members. So it's very reasonably priced. Okay, let's just jump into this. Let's look at, I'm only going to look at a few markets today. I actually have I have my baby. She's sleeping in her car seat in the background here in the office, and we have a couple of family functions today. So I'm going to try and keep this short and to the point. Let's look at the, especially before she wakes up. You may hear a little voice calling Dada if I take too long and she wakes up. Okay, so let's just jump into this. Let's look at the Dow futures on the daily chart. The Dow futures just came up and tested, almost tested this high here, which was sort of what we were anticipating. Just from the perspective of, the market has a long side bias. We had positive momentum, both in the stochastics and the MACD. The question is whether we're going to break this high and go higher. We're heading into a period of seasonal strength, and the stock indices from, we've been talking about this for a while, from March, the beginning of March until at least the end of April, and then we tend to have a pullback and then a push higher. You can reference last week and the week before's video for the charts on that. And if we take a look at, let's jump over to the sister indices. Here's the S&P. S&P's broke out to new all-time highs, and they've held those highs even though we've closed with a doji on the day. We are statistically overbought from a not from the MACD's perspective, but from the stochastics perspective. But having said that, the market in a trending environment can stay overbought for long periods of time. It's just a sign of a very strong trend. Okay, so we close with the doji on the week, but we're still holding the 8-period exponential moving average. There hasn't been a lot of intraday movement since the breakout, back on, I guess that would be Tuesday. But you still have, a market that is pushing higher, even though the intraday moves have been fairly muted. You have these very tight range days. You had this wide range day. Now you have tight range days. That, the question is, are we going to get another wide range day back up to the high side, or are we going to pull back to support? As far as I'm concerned, the market is still higher until it proves otherwise, but it's very hard to actually do anything here. I don't feel like the market is actually actionable. I'm going to be waiting to see if it holds this breakout. The next pullback may be a potential buying opportunity. That applies to all of the indices. Let's take a look at the Nasdaq. The Nasdaq closed a little bit weaker than the other indices, but it's still holding the breakout above its highs. And basically the same situation. The MACD's looking a little bit overbought here. So the question is, are we going to get a deeper pullback or not? But the market's still positive. Let's look at the Russell futures. Same thing here. We're holding the breakout. We're overbought. Same analysis here. Let's take a look at the transports from a Dow theory perspective. So the transports actually came up, and they look a little bit stronger than the Dow. You've got this nice little cup pattern happening here. So this is interesting. You know, the transports are confirming the Dow from a Dow theory perspective. Let's take a look at the other key markets I wanted to look at this week. Let's take a look at the euro first. So the euro broke $1.3820. We closed at about $1.3878. This is significant. This is something we need to keep an eye on. We've been talking about, these markets aren't really going to get anything going. There's just a big breakdance fight going back and forth. You're probably sick of hearing me say that for those that have been watching my video, but there's been a breakdance fight back and forth between the dollar index and the euro. The euro finally broke out on this wide range bar on a little bit higher volume here. You can see the volume, positive momentum. You've got a bit of a divergence here, but I mean, the price action is telling us we've got a breakout. We closed above that level, $1.38, $1.3820, and then that's not a very telling bar, but we did stay 2 days above that breakout point. So we need to see if we're going to hold $1.3820 and see if we're going to get this is really where the euro could get interesting and the dollar index could get interesting to the downside. So let's we're probably going to need a couple of days just to prove it out. You want to make sure it's going to hold that level. But let's just take a look at the dollar index. The dollar index is coming in. I think I said last week 78.20 support I might have wrote. I meant 79.20 support. So you can see here we're coming into 79.28 support, and this is really a key support area. I can't even draw a straight line, but this is really the key support area on the dollar index. We need to see if we're going to hold that. We are statistically oversold, but this is the support level we need to hold. If we break that level, then things are really going to get interesting to the downside. So key levels in the euro, $1.3820 to hold above support and or above resistance, and that should become support, and 78.28. If we break this level and hold below 78.28, things are really going to get interesting in the currency market. Let's just take a quick look at the USD CAD. The USD CAD is just sort of going sideways, but it's not really letting go. More bullish than bearish, but until we break above this high here at just over $1.12, we're just essentially sideways. And let's take a look at the crude oil. So the crude oil has just been, meandering around this level 101.32. It looked like it was going to break it on Thursday, and it probed below it, and then we closed above it. I just need to pause the video for a second here. Okay, I'm back. So Zoe woke up, and Zoe's sitting here on my lap as we record this video. So you may hear some noises in the background or in the foreground here. So Zoe, we're taking a look at the crude oil. So the crude oil held. Okay, honey, I'm gonna let you down. So the crude oil held $101.32. So that's really the key level to hold to see if we're going to get anything going. If we can hold that level, then things could get interesting to the upside to probably $110 to $115. That would be the upside target as long as we hold 101.32. We've been building up a lot of energy and consolidating around this level for quite a while. Let's just take a look at a couple of other markets, and then I'm going to wrap up this video. We've covered the key markets where I feel like there's movement or that there's something underway. Some of the other markets are a little bit quieter. Let's take a look at natural gas. Is just holding between 444 and 459, let's call it. The question is the market going to go higher, or is it going to fail from here, based on weather or based on other fundamental factors? The market is really undecided, in my opinion, and it's just holding support. Let's take a look at gold. Gold still looks higher, but it's just not really, it's just sort of going sideways and holding support. We had to pull back to almost the 20-period moving average. Take a quick look at silver. Not much going on in silver. So that's all I really have this week. I don't really, I'm just going to flip through a couple of other charts. Here's the 30-year. The 30-year sold off pretty hard here. And the 10-year sold off pretty hard. Let's take a look at interest rates. So interest rates are coming back up, but there's really nothing significant going on unless we get above 3% in the 10-year. So I think that's pretty much all I wanted to look at this week. I don't really see anything else all that interesting setting up. The major things are, the stock market is a stock market. Are the stock indices going to go higher? They're going to hold above the breakout level. Is crude oil going to hold 101.32 a barrel and push up to maybe 105, 110, 115? Is natural gas going to hold, 458, 444 to 458, 459? Or is it going to fail? And the really key thing going on, I think, is the relationship between the euro and the dollar index. The euro comprises something like 47% of the dollar index, and breaking above that 138.20 level is pretty key. So I'm going to wrap up this video. Good trading, good investing. Hope to see you at the upcoming CSTA meeting. All the best. Bye for now.